Ladies and gentlemen, welcome back to another episode on this channel. Elon Musk just called out the short sellers in Tesla in a way that he has not done so in a while, outright saying that they're going to be obliterated. I think that's a good way of putting it. I think sooner rather than later, and we'll get into that here in this video. JP Morgan has bought a new massive position in Tesla stock. It's funny though. JP Morgan has one of the lowest price targets on Tesla. So why are they continuing to add? I wouldn't be shocked if we get a price target increase here coming soon. All of your Tesla stock and much more in today's episode. But you'll notice Tesla is down somewhere around 1.8% at the time of recording this video. Look at the Russell, down 1.71%. It is a rough day on Wall Street. And we're going to get into why that is in today's video. Long story short, it's the PPI. But is it as bad as the Russell would suggest? Perhaps, maybe not. It could actually help fuel the argument for rate cuts. We'll get into that as well here in this video. Ladies and gentlemen, hit that like button, subscribe to the channel if you have not done so already, and most importantly, check out that link down below in the description of this video if you want to come join, hands down, the best trading community in the entire world. Now, this is not something you should join if you're already rich, okay? That's not the idea here. The idea of what we are doing is going out, finding small cap AI stocks that have exponential return potential. Not dog shit companies, but great companies that Wall Street just does not know about yet. Yes, it happens for one reason or another. There can be hidden gems in plain sight, so to speak, that retail doesn't know about yet. Wall Street is on the sidelines for one reason or another. One in particular, right now I have $80,000 in, and I think that is going to make or become well over $1 million position in the next 24 months. And I'm very confident in that. So that's basically what we are doing. If you guys would like to come join us, check that link out down below in the description of this video. We're really striving for those outsized returns while trying to take on a less risky risk profile. Because if you want a 10, 20, 30x, typically you have to take on a lot of risk. Okay? Typically you're going to be in low quality stocks, Hail Marys, if you will. We're looking for high quality stocks to give us those same returns. They are far and few between. So when you get those kind of opportunities, I like to pounce on them. Link down below in the description of this video. But on to today's episode. And as always, let's get this video rocking and rolling with your Tesla stock breaking news. Now, Tesla Boomer Mama on X says Tesla shorts. Here's the list of current net short sellers of Tesla. The number one new position is MUFG Securities, EMEA, a London-based wholly owned investment banking subsidiary of Mitsubishi UFJ Securities, which is part of the Japanese Mitsubishi UFJ Financial Group. They are not related to the auto company. Most of the others on this list are unchanged from Q1, with Bank picked it, number 3, now number 21, sensibly decreasing their short position. So some obviously, notable names on here, right? Citadel, Jane Street. I think partially some of these short positions have to do with just the broader kind of economic conditions, not necessarily related to Tesla's business in general, okay? There's a lot of hedging that takes place, if you will, where Tesla can just be a part of that strategy. But one position really stands out here. It is the position of Jane Street. They are short Tesla $869 million worth. That's quite a short position, considering Tesla only has about $22-ish billion sold short in the company. Just them alone hold almost 5% of the entire short position in Tesla. Elon Musk responded to this and says if they don't exit their short position before Tesla reaches autonomy at scale, they will be obliterated. Now, Wall Street is a fascinating place because Wall Street prices things in ahead of time. So before Tesla even reaches autonomy at scale, which could be over the next couple of years, who knows the exact timing of that, okay? Wall Street's going to price that in ahead of time. Now, the function of markets pricing things in has to do with two things: interest rates and the economy. In my scenario, my view of, these two things going forward is the economy is going to hold up, not go into a recession. So that's good for multiples and valuations and for future pricing of expectations. But then you're also going to get a bunch of rate cuts still. Yeah, I know we had hot PPI data that came out this morning. We'll get into that in just a moment. But it's really not moving around the odds of rate cuts all too much. Not like you would think, given the Russell is down so much. So when you have a strong economy, interest rates coming down, you start to extend the time horizon out a lot, okay? So if autonomy at scale is, I'm just going to throw a number out there, 2.5 years away for Tesla. And right now, Wall Street's only really concerned about the next 6 months. But as rates start to come down into 2026, let's say 6 months later from now, as rates are coming down, as the economy shows it's not going into a recession, Wall Street may start pricing another 12 months out or another 18 months out and giving Tesla the benefit of the doubt ahead of time. Hence why Tesla was a $400 plus stock, briefly, albeit, in 2021. It's because rates were low, the economy was doing fine, and people really lengthened their time horizons. I believe that is going to happen again heading into the end of this year and into 2026. Okay, that is why I do think Tesla is going to have a pretty aggressive rally into year end and throughout really all of next year. We might start to price in autonomy at scale if Tesla continues to scale robotaxi as fast as they are. It looks like Tesla could soon be entering into the New York market. I mean, pretty soon you're going to have San Francisco, Austin, New York. They reference Florida on the earnings call, Arizona, Las Vegas pretty soon. You could start to see how reaching autonomy at scale is no longer like a pipe dream from Wall Street's perspective. Again, we know it's going to happen, but from Wall Street's perspective, to more of like a, oh crap, this might actually happen kind of thing. When that realization comes about, that's when, mixed with interest rates coming down and the economy doing well, you're really going to start to price out that future growth for Tesla. Thus, Tesla stock could rally aggressive into the end of this year and again 2026. Elon Musk also had some very interesting things to say about AI in general. He says here, for the foreseeable future, the major AI companies will continue to prosper, as will XAI. There is just so much to do. He says outside of real-world AI, Google has the biggest compute and data advantage for now, so currently has the highest probability of being the leader. That may change in a few years, but really what I hear out of this is AI is not going anywhere. That's something that I believe, that most of you, I think, believe. But again, hearing it from Elon is reinforcing of my bull thesis, in which, if you're unfamiliar, I think AI is the biggest revolution since the internet. It may one day be seen as bigger than the internet itself when you're talking about humanoid robots, self-driving cars, medical advancements, okay, that are all going to come from AI. This is an opportunity you're not going to get again in your life. You're not going to get another AI opportunity in your lifetime. Question is, do you invest in the right areas? Do you invest in the Yahoos of the .com era? Or do you invest in the Googles of the .com era? You don't want to invest in the Yahoos, in case you're unfamiliar. You want the Facebooks and the Amazons and, the Apples, right? You want the good companies. And that is exactly what we are doing in the trading community. Link down below in the description of this video. And I think this is just really cool. Tesla Manufacturing's X account posted this image of the outbound what looks to be the lot of the Giga Berlin factory. On the wall here, you can see some incredible artwork. Look at that, dude. That is wild. The planet with Europe and an astronaut in space. That's really cool. Now, also in the news today, Tesla tops the US EV charging satisfaction rankings again. J.D. Power's 2025 U.S. Electric Vehicle Experience Public Charging Study shows that America's EV charging network is becoming more dependable, with Tesla's supercharger network continuing to set the benchmark for the 5th consecutive year. And also in the news today, Tesla has received another exemption for testing FSD on public roads in Norway. And we're getting another video here from the Tesla semi-factory in Nevada that looks to be pretty damn close to completion. Elon Musk has said recently that we're going to be entering mass production of the semi next year. And this is something Wall Street really doesn't care about much, but it could add about 10% to Tesla's revenues. It could actually be something that should be getting more attention today. Tesla posted on their main Tesla account this funny line here. It says, "Living rent-free in your head." And obviously this is to stir up a little bit of friendly drama. Also in the news today, JP Morgan bought 6,600,062 shares of Tesla stock in Q2, which is interesting. Last I checked, JP Morgan only had a price target of around $130 a share for Tesla. So could we see a price target increase coming that honestly is long overdue? Possibly. In option activity from hedge funds and institutions today, you have 68 different trades totaling $39.6 million with a positive order value of 62%. Volume on the call side about 61% and volume on the put side about 39.5%. Okay. Shorts today are covering about 111,000 shares. Short interest of free float at 2.6%. Okay. The dollar amount sold short in Tesla at $23.89 billion. And the total amount of shares sold short at 70.39 million shares. So short sellers continue to cover on short positions. But again, the big story today was PPI, okay? PPI month over month, the headline came in at 0.9%. This was like the worst number in almost 5 years. The consensus was 0.2%, so it came in really hot. Core PPI month over month also came in at 0.9%. The expectation was 0.2%. So we've talked about this on the channel, but just as a little bit of a refresher, the idea is that PPI, producer price index, or producer price inflation, is a metric of evaluating inflation before it hits consumers. In theory, PPI would go up and then CPI would go up. As company costs go up, they raise prices on consumers, and that feeds into CPI. What's actually fascinating, though, is PPI doesn't tend to have a lot of correlation to CPI. It does feed into a lot of PCE, personal consumption expenditures, okay, which is the Fed's preferred gauge of inflation. That's where these numbers are kind of strange today, okay? Now, what's worth mentioning is when you exclude core goods, which there wasn't much inflation of core goods, again, the largest rise was actually in services, okay? Core PPI, excluding goods, was up 0.6%. So goods PPI was only up like 0.3%, which is almost in line with expectations. Kind of like what we've seen with the CPI. Not a lot of goods inflation, but a worsening service inflation story. Again, for the Fed's sake, they've been worried about tariff inflation. We're still not really seeing that tariff inflation. Even in today's PPI data, a lot of it was in services. And that's why I don't think this is nearly as bad as some people think. I think the numbers kind of hit the algorithms and the algorithms react to it. Here on the day today, there's still a 92.4% chance of a cut September 17th. So you're still virtually like, you're almost indefinitely pricing in a cut for September. Okay. There was like a 3.4% chance of a 50 basis point cut in September yesterday before this data. Okay. So you've lost that, and there's now a 7.6% chance of a pause. But again, I don't think the data was all that bad today. It definitely is if you look at the headline numbers, but under the surface, it wasn't as bad. Don't be surprised if you see this market that wants to bounce over the, coming days. Like, this wasn't the dagger in the coffin for the bulls. A little bit of a setback, sure. A little bit of inflation, sure, but not from tariffs, if that makes sense. So that was the big news today. You also had initial jobless claims that came in lower than expected at 224,000. The expectation was 228,000, so about 4,000 lower than expected. You also had some bond auctions today, some Fed speakers, but PPI was really the big catalyst, which I actually thought PPI wasn't going to be a big catalyst unless it came in really high or really low, in which it did come in really high. So it did turn out to be a catalyst for this market. Now, tomorrow, you're going to get retail sales for July and Michigan consumer sentiment. So retail sales month over month are expected at 0.5%. Last month was positive 0.6%. So if you're comparing on a month over month basis, that's almost no change. Okay, slight decrease. So you really don't have high hopes or high expectations for tomorrow's data, which when expectations are low, I tend to notice at least we typically beat expectations. Now, if we're expecting really good numbers, it's kind of a toss-up. Sometimes we come in line, sometimes we come in a little bit lower, but almost every time we have really low expectations, we blow them out the park. Okay, so that would be my best guess for tomorrow. You're also going to get export prices month over month and import prices month over month. That's going to tell us a little bit more about the inflation story as it has to do with tariffs. Okay, so that's going to be important as well. That data comes out at 8:30 in the morning tomorrow. You're going to get New York Empire State Manufacturing Index, expecting that to weaken, and Michigan consumer sentiment, again, expecting the headline number to go up a little bit, but inflation expectations over the 5-year period are expected to rise from 3.4% to 3.6%. Consumer expectations are expected to weaken from 57.7 to 56.5. Current conditions are expected to fall from 68.0 to 67.9, and 1-year inflation expectations are expected to rise from 4.5% to 4.8%. So really across the board, you're not expecting like great data tomorrow. That could set you up for a beat or an upside surprise. Now let's get into some of your headline news today. Trump says that 401ks in the stock market are soaring. Trump says that there is hardly any inflation at all. Trump says that inflation is down to a perfect number. Now, I think in just a big win for the country, not important for the market's sake, Kellogg becomes the first company to sign legally binding agreement removing toxic dyes from cereals. Brazil's president says he won't cry over the U.S. stopping purchases of Brazilian products. Trump's trade advisor Navarro on PPI report says, let's see what happens and watch the data. Navarro says heavy focus of tariffs will be generic pharma products. And he says that pharma tariff rates are a work in progress. Navarro says export controls by China and Russia could hurt us. And an N12 report on Iran says an agreement has been reached to resume negotiations with the USA. The political establishment sees this as a way to avoid an existential threat after seeing the cost of military confrontation. Trump today praised the NVIDIA Blackwell chips. Trump on Chinese EVs says, quote, I don't like losing business to China. Fed Muselam says a half-point cut is not supported by the state of the economy or the data, which is kind of a good thing to hear the Fed say, that the economy doesn't need a 50 basis point cut. As I've said before, rate cuts are not uniformly positive. The only way rate cuts are actually positive is if the economy is doing okay, and inflation's coming down, and that's why you get rate cuts. If the Fed needs to start panicking to cut rates and aggressively cut rates because the economy is weakening, that does not historically correlate to a strong stock market. Muselam says there's a reasonable probability tariff impact on inflation will be more persistent. Fed Muselam says so far there is muted tariff impact on core goods and services. Fed Muselam says if the Fed were to weigh the labor market side more and reduce rates aggressively, that could lead to higher inflation expectations and be counterproductive. Muselam says elected officials are entitled to have views about monetary policy, but the Fed's job is to listen to Main Street and businesses in the district. Muselam says, I'm not hearing about layoffs from businesses. Again, that sounds good to me. That sounds like a positive comment. Trump says in regards to Russia and Ukraine, they'll make a deal and divvy things up at the second meeting. Trump on the Putin meeting says he would impose sanctions if it's not solved. Muselam says, I will further revise my view as more data comes in. Too early to say what the right decision is for September. Donald Trump today actually put a 25% chance or probability on the meeting that it could turn into a failure. So that's actually pretty good odds that Trump thinks there's going to be something good that comes out of this meeting between Trump and Putin tomorrow. Fed Muselam says, I have revised my sense of labor risks slightly higher and inflation risks slightly lower. Fed Muselam says it is reasonable to expect the payroll break-even rate is below 50,000. That is the amount of jobs we have to add per month just to keep the labor market kind of where it is. Muselam says the demand for labor has declined, but so has the supply. Muselam says the labor market is at full employment, but risks are to the downside. Muselam says, I expect most of the impact of tariffs on inflation to fade in 6 to 12 months, but it could be more persistent. And Fed Muselam says inflation is running close to 3%. Trump said today he does not think we can get an immediate ceasefire, that he is more interested in an immediate peace deal. Trump says the secondary sanction on India influenced Putin's meeting. Donald Trump said today that Mexico and Canada does what we tell them to do. I gotta share that. That's funny. So again, we will talk about all of this more in depth in the next video. Tomorrow is going to be a big day with the economic data, as well as, Trump and Putin's meeting. Okay, so you definitely have to watch that video coming out at 8 p.m. tonight. You do not want to miss it. Now, I think it's also going to be a big day for Tesla, and I do think there can be a bit of a bounce back in this market tomorrow following the PPI. Again, was it on the hotter side? Yes. But was it on the hotter side because of tariffs? No. It would have came in okay if we were just looking at the tariff impact. A little higher, a little bit higher, around 0.3%. But not 0.9%. That was really services that boosted the numbers today. And again, I want to point out Tesla on a technical basis today bounced right at this trend line. Tesla is one of those stocks that you really want to watch the technicals because it follows it so precisely. Look at that. I have not moved these lines. They have stayed the same. You bounce literally right at the line today, almost literally down to the penny. Okay. That, to me, looks good for now. Now, if we were to break down back into this flag pattern, then things get a little bit dicier. But all things considered, and this is where it's important you watch the next video coming out at 8 p.m. tonight, I think the next move is to the upside. Ladies and gentlemen, hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.